Hello and thanks for joining us at interest.co.nz. I'm Janae Tibshirani and today my guest is National's finance spokesperson, Paul Goldsmith. Thanks for your time, Paul.
Great to be here.
National's economic plan is, I'll try to sum it up, it is to give the economy a hit initially with a 16-month income tax cut and also make some tax changes to help businesses and then longer term invest in infrastructure. And this is mostly going to be paid for largely by halting contributions to the New Zealand Super Fund. Paul, why is it necessary to do this for 10 years?
Well, I don't quite agree with your summary there. Actually, the plan is short-term stimulus, yes, followed by continuing to invest in core public services. And so we can continue to increase spending every year, but not at the same rate as Labour. And then over the next decade and a half, having a path back to reasonable levels of debt. Not putting money into the super fund as part of the equation, but the biggest gain over time is actually more disciplined spending on day-to-day spending every year. So that's where we get most of the savings. Labour wants to increase spending by about 2.6 billion a year. We're going to be increasing it by 1.8 billion, and that gap over 10, 15 years makes a colossal difference. So that's the biggest change.
Okay, with the super fund contributions, why would you like to halt them for as long as 10 years?
Well, look, we're not, we're not against the super fund. We think they've done a good job and they're good people. We just take the view that at a time when we're borrowing colossally, it's better to be spending that money on New Zealand and on improving the infrastructure of New Zealand rather than putting it on global stock markets for use in maybe 20 or 30 years' time. That may, in 7 or 8 years' time, we may be in a position to start up again, but at the moment, the way we're looking at it, we'll halt those payments.
Okay, so the Treasury has this model that it uses to calculate things around the super fund. And according to that model, if you plug in some numbers, the super fund would be worth $87 billion by 2031 if those contributions were halted. If they weren't halted, it would be worth $109 billion. So that's a $22 billion difference. And that's obviously based on a number of assumptions that Treasury's made.
Well, and we can speculate.
So $22 billion, that's a pretty big opportunity cost.
Well, yep, but I mean, every investment statement that you'll ever read says past performance is no guarantee of future returns. And so, look.
So this is based on an assumption of an 8% annual return, which is, I believe, a bit lower than its average today.
Yep. And who knows? I mean, if it was a slam dunk, then we might as well just borrow $500 billion and give it to the super fund. It's not a slam dunk.
It just doesn't make sense when you can borrow at such a low rate. And presumably, even if the stock markets do terribly and do worse than 8%, presumably over 10 years, they will do better than the exceptionally low rates that the government can borrow from. So that it doesn't make sense, which does make you wonder whether this decision is a bit ideological. Like, do you just not like the super fund?
No, it's the same decision that John Key and Bill English made during the previous crisis. That we.
So does that make it the right decision? We missed out on a whole bunch of returns.
Well, you can't guarantee of future returns. It may be that the next decade the stock markets go backwards by 20%. Nobody knows, so all you're doing is you definitely have to pay back the debt. What you don't know is what the returns are going to be.
I just wonder why you would bother having a long-term investment vehicle that's set aside to pay for our future super if you don't take a long-term investor's strategy. So most long-term investors know that you can't sort of dip in and out of your long-term investment. You set an amount and you just keep investing through the highs and lows. It's kind of investment 101. So if you're not going to follow that principle, why do we bother having the super fund?
Well, of course, governments are not the same as individuals, and so we have a different approach to funding and saving, and we do recognise that we have very high levels of debt over the next few years. And so the question is, do we want to keep on adding to that debt at even higher levels? And so the overall amount of debt does matter.
One of National's new schemes is to pay small business, or pay any business actually, $10,000 for every new full-time employee they hire. And this would be capped at 10 employees, so $100,000 per business, and it would run through until March 2022. This concept. A concern might be that it will support businesses that are already doing well. I mean, it could support supermarkets, for example, whereas it might not support the struggling businesses that can't employ new people. What would your response be to that argument?
Well, look, it's one part of an overall plan for job creation. The real driver is going to be that private sector investment and confidence, and stimulating the economy more broadly. But to help some people over the line, I think that short-term plan of Job Start, which is giving $10,000 for each additional hire, may nudge a few employers over the line, of people who are on the boundary thinking, will I, won't I? There's big risks of taking on an extra person. I don't know. There's costs involved in it. This just may help push a few over the line. And if that gets a few more people into work, then that's a good thing, because literally the Treasury said that we could be losing another 100,000 jobs in the next 2 years. So these are extraordinary times, and it needs extraordinary measures.
Okay, but National's been upset recently by businesses taking the wage subsidy if they don't really kind of need them, even if they qualified for the criteria. So no doubt there'll be a whole range of businesses that'll take this and they won't need it because they'll be doing okay because they can hire a new person.
I don't quite follow your logic there. I mean, this is a relatively simple scheme that if you're taking on an additional person, then you qualify for a $5,000 payment at the start and the second $5,000 after 90 days if you keep them on. So look, I don't. It's important and it helps on the margins, but like I say, the fundamental driver will be dealing with those broad issues around small businesses and how they cope. And frankly,
there's a pretty big price tag on Job Start though. One of the figures I saw was $500 million. So
that's if we get all the 50,000 extra employees. So that would be a dramatic success if that's the case.
Okay. Look, you've said that National isn't keen to pick winners, as this government has, selected particular businesses to receive tourism grants and supporting Air New Zealand and so on. If we were to go back to a lockdown, say a level 3 lockdown, and some of those businesses were doing terribly, would National provide support for sort of structurally important businesses?
The first point, of course, is that it has to be an absolute overwhelming priority of the next government to avoid going back into lockdown at all costs. It's got to be the very last lever we pull, rather than what felt like the first lever that was pulled at the second lockdown. And so that's where the whole border strategy comes into shape, to try and reduce the odds of that.
Say, for example, we have to. So,
well, if we have to, then I think, then you're forced back to some sort of short-term wage subsidy again. I think because the logic for that is overwhelming. What surprised and disappointed us was that the first wage subsidy set up in a mass of urgency was very loose. There's no question about it. What surprised us is that the second round, they hadn't really made much change over the 3 or 4 months, and they hadn't sort of targeted it more effectively. So I think if we were into a third situation, we would ensure that the scheme was more robust and more targeted to those who really need it.
Okay, so that's actually quite a good point. What would you change? Would you need a larger fall in revenue to qualify, or would you need to be a certain size business? How would you change that to tighten it?
Well, look, frankly, we would take the best advice that we have available to us. One of the frustrations of
that's a cop out. You've had a long time to think about the wage subsidy.
Yeah, sure. But we have not had any access to any of the advice that the government has offered and presumably made their decisions on. They've talked about being an open government, and they haven't released anything other than heavily redacted stuff 4 or 5 months too late. But look, I mean, the obvious sort of things that you need to juggle is how you measure the decline in revenue. What's the period that you use in order to get a realistic assessment of that and the impact that it holds. And the length of the lockdown, of course, is the thing that is hard to predict, and the consequences of it. So just coming in like we did the first time round and said you got 3 months of this payment, even if you're only in lockdown for 4 weeks, that seems to me to be pretty loose.
So you want to rein it in, but at the time National was suggesting the government gives businesses cash payments. So you wanted it to be tighter, and now you wanted to be tighter, then you were happy with it and actually wanted it to be looser.
No. What the reference that you're referring to was when we were in level 4, and we were talking about what was required for the budget then, and at that point. And so you've got to be flexible. I mean, one thing that everyone can see.
Look, Paul, how would you recoup wage subsidy payments from businesses that might be performing quite strongly now and paying high dividends and so on?
Well, look, I think the Judith Collins during the debate made that point, and look, think that that would be a very last resort, trying to come up with a legislative clawback. I think
might cause a bit of uncertainty.
Yeah, it certainly would, and so it would be a last resort. What I think the primary mechanism that we would be using is just sunlight, in the sense that the information is available, and there are some companies that people know took the wage subsidy, and also know that they've continued to be highly profitable for the year. And it's up to them. The most precious thing that many businesses have, of course, is their reputation. So you have to defend and justify that. So naming and shaming is appropriate, and so people have to defend their decisions.
Coming up with last resort, would you do it at all? Last resort, would you even do it, or recoup it, or not? Like, what would have to happen for you to recoup it?
What would have to happen is to have glaring examples of significant companies that have taken huge wage subsidy and are roaring away highly profitably for the same year. And if they weren't yielding to public pressure on that, then we might have to look at other options. But that would be a last resort.
All right, look, just quickly, finally, income tax cuts. Obviously, this has attracted a lot of attention. Just wanted to clarify, is this for stimulus purposes, or is that the goal?
Well, a key element of it is stimulus. From the 1st of December, somebody on the average earnings around 64,000 gets about $3,000 in the hand over the next 16 months. And that will put about $4.7 billion back into the economy, or not take it from the economy would be the correct way to do it. And so we think that will have a stimulatory effect. It's also fundamentally our view that that people deserve to keep more of their own money, and if you can possibly arrange that, then that's a good thing, and encourage particularly those that sort of forgotten middle of New Zealand who work hard full time. They look after themselves and their family, and we think that they are deserving of some of their own money back.
All right. Paul Goldsmith, thank you very much for your time. Appreciate it. And I'm Junaid Tirani from interest.co.nz.